The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I'm going to try to answer a few questions here this morning. We started out with the DAX chart. As you can see, folks, this thing gave up 200 points so fast it almost acted like it didn't even exist. That's not very good price action. We don't want to see that today in our market. To me, I'll cover this a little bit later in more detail, but watch that price level of 23.90 in the S&P. If we go below that, that's not going to be good. So far, it's holding relatively well above the 382, but that could change momentarily. I'll try to answer some of these questions. The first one, of course, is how much different this is than the 2009, folks. It's not any different at all than 2009. You'll see from the chart here where we were in March. We were making 3 drives to a bottom. The ratios were there. The ABCD patterns were there. The volatility that we had yesterday, 1,000 points in the Dow. I believe that's the biggest up move we've had in the Dow. And remember, I mentioned that we'd had these 600-point down moves in the Dow. The next move would be 1.618 of that, which is 1,000. It happened to be to the upside, not to the downside. So the next move after that will be 1.618 of that. That'll be 1,600 points. And I assume that one will probably be to the downside, but when, I don't really know. But what we're doing now is very similar to what we had going on in March of 2000. The difference is, if you'll look at that low down there, March of 2000, that was an exact 61% retracement of the low that we made, I believe, back in 2003. I'm not sure exactly. I have to go back and double check that, but it was a 1987. Thank you, Mr. Z. I knew I could count on you to give me that. That's absolutely correct. But here's my 2 cents worth of what we're doing right now in the market. This whole thing started because of the banking crisis. This next chart tells it all, folks. This lays it out the best way I can tell you that it can be laid out. This is the chart over the last 10 years. You'll notice the 61% retracement back in 2011. That was a beautiful Gartley pattern. But look where we are right now. The low that we made yesterday on Wednesday at just a tad under 80. I think it was 79.87 was the low. That was the high that we made back in 2015. It was the 61% retracement of the low from 2016. But more importantly, folks, it was the 382. Well, not more importantly, but equally important, it was the 382 of the low of back in 2009. This is really important, folks. We've had a big drop here in this banking index. That's where the problem lies. I will say, I'll give you my 2 cents worth here. If we go below 80 on a closing basis, the one suggestion I would have is I've always recommended the folks to always have some silver rounds. We've been saying anytime it gets anywhere near $14 is to buy those silver rounds. You should have some silver rounds, but more importantly, you should also have some paper money. Have some 5s, 10s, and 20s. I wouldn't have anything any bigger than that, but have as much as you think you need for a couple months, because if we go below that level in the banking index, there's a bigger problem out there that they're not telling us about. And I can, I smell it. And my nose ain't that good sometimes, but sometimes it is. Deutsche Bank is a piece of junk, folks. It keeps going lower. Gap down again today. It's still following on the heels of what we did with Lehman Brothers. I want to bring this chart to show you that, it's going down. They're not going to let Deutsche Bank go. I don't think the German people would allow that. They'll just rename it, recapitalize it, or redo something. But it'll be taken over by somebody. But I don't believe they're going to let it go under. But it's trading near just a little above $7. And if you remember, that 1.618 was 10% higher up there at 858. So it looks it looks very, very negative in the Deutsche Bank. It just and that's the real problem, that we're looking at. Now, I want to share with you one other chart that is extremely important if you believe in Fibonacci numbers, because this is the New York Stock Exchange Index. This is the weekly chart. I'd like for you to see that the low we made yesterday on the weekly basis after we had the big rally was exactly 61% of the 2016 low. That's a very, very important level. And as long as we stay above that, it looks pretty good. And we should have a pretty good rally from here because we've been down ever since January is when the New York Stock Exchange Index topped. And you'll notice when the other indices were making new tops in September, in the New York Stock Exchange Index, we were making the Gartley sell signal. That's when I was, my extreme bearishness came in with part of that. And so that's one of the reasons. Now, I also mentioned that during that time that there were two factors that I couldn't share until some of this stuff was over. I will share you one of them now. I won't share you the other one until this whole move is over, which I don't think will be over for another 18 months or 2 years. But when we were up there in September, during my years at Drexel Burnham, I met some really wonderful people, had some wonderful customers, and some of them I'm still in contact with after all these years. But one gentleman was, Morty's 88 now, one of the nicest, most successful businessmen you'd ever want to meet. He loves to trade. He can trade 1 and 2 lots with the greatest traders in the world. But when he puts on a 10 lot, boys and girls, it's like the man with the sickle is standing right behind him. He has 100% rate of losing when he puts on the 10 lot. And the trades look great, and the theory is good. It's just that his whole premise of doing it is something's wrong with the 10 lot, and he gets out of it quickly, but he's always wrong. I've kept track of I'm talking 30 years, folks. I've never seen him have a big win when he's had a large position on, and he put his largest position on September the 5th, right over the Labor Day weekend. He went heavily long in the stock market, and he told me he was doing it. I don't discuss the patterns with him. I don't remind him that he's wrong all that time, but he actually is. And when he goes long down here, folks, be really careful. But he's just a super nice guy, and believe me, the money involved here is peanuts to him. He's worth a lot of money, and a super nice guy. Had a great life, wonderful kids and grandkids, and it's just anyway. That was one of the reasons. The other reason I'll share with you probably a year or so down the road. So, well, a 10 lot back in those days, Jim, 10 lots in the S&P was equivalent to 100 lot that we had now, because the S&P started trading in '82. And that's when I left Drexel, but he was trading the large lots back in '87, and he was actually long on the day of the big crash, but he held it through and ended up making a lot of money on it later on. So I'll let him know if he does that. So we'll pay attention to that one for sure. Okay, now I did want to talk to you just, we got a break coming up here. I'll try to discuss what I see happening right now, if it's any help at all. I mean, we think there's a bottom in here, but my gosh, you don't know for sure. Look how quickly the Nikkei gave up its game yesterday. It was up 500, ended up being down on the day. Same thing with the DAX. And the FTSE never even was up. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we have a question from one of our listeners about how do you buy, gold and silver. The easiest way to do it is to go on the internet and find a local coin dealer that's near you. Make sure that they're an ANA, that's American Numismatic Association, or the PCGS, Professional Coin Grading Service. Make sure they belong to one of those two organizations. They're pretty well regulated, and they're pretty fair because they deal in volume and stuff. And it's really okay, but it's really good to have some silver rounds. And the silver rounds are 1 ounce of pure silver. They're 99% pure silver, 99% silver. They're beautiful coins with the St. Gardens on them. They usually sell for about $1.50 or $2 higher than the spot. So if you're looking at a price of $15 in silver today, it's probably going to cost you $17 to $18 for one of those silver rounds. Gold is priced about a 5% premium. So if you're buying a $1,278 U.S. gold coin, which is 1 ounce of pure, that's going to put a premium of about $60 on it. So that's the buy and sell part of it. But remember, it is a must. That's Mr. Z is saying it's a must to do bullion transactions face to face with a person you can trust. I wouldn't do it over the internet, but if you live in any major city, just check on. But the key to it is look for someone that is registered with the ANA, the American Numismatic Association, or the Professional Coin Grading Service. They will do. They're not out there to rip you off for a few bucks. They do volume business. So we're able to see here. Tom is saying that we could have one hell of a run here in gold and silver, and folks, we certainly can. And I believe the key to that will be the banking index, because if that banking index goes below 79, it's trading at 85 today, and if we break below that, there's a problem in the banking system. Just like we warned you here at TFNN, there was something wrong with the real estate market back in 2007 and 2008 when Bernanke was saying everything was green. We were saying, hey, we don't know what's wrong with this market, but there's something seriously wrong, especially in 2007 when we went below the August 15th lows, and we're in a market. Tom could probably tell us someone near Largo. He's Jay. Here, he's giving your answer right here. J at Silver Queen. Yeah, it's in Largo. Go to J at Silver Queen and let him know that you were on Tiger TV, and he'll help you out because Tom knows those reputable guys. But that's good. Those of you that are out in there in the world that don't have access to it, just go online, make sure the person's ANA or PCGS, and you're going to be just fine. Because those guys I worked with them for years. I was around when PCS just started. It was David Hall was the first guy that started it. He and Steve Deeds and all these other, and what was it, Steve Markoff at A-Mark Coin that's now listed on the New York Stock Exchange. Those were my customers. I dealt with those guys, and I know that they're very, very reputable. They're not thieves. They try to get the best deal for themselves, but they're pretty nice guys. And it's just like any other business. You got to be really careful who you do business with. But now with all this grading that they have, it's much, much easier. Okay, let's take a quick look. I posted the chart of the S&P yesterday, and I mentioned, that once we got above that 2570, we could be on our way. But, after that high was made, folks, we backed all the way off to a 61% retracement exactly at 2350, and then we took off. And once we went above it the second time, it was really much on its way. Here's where we stopped in the NASDAQ. Oh, shucks. Stop the front door and raise the rent. Let me get this up here, and we'll get this here. Here's where we stopped in the NASDAQ last night. Thus far, we've come a little bit below the 382 retracement in the NASDAQ from yesterday's run. We have not done that yet in the S&P. The S&P key number is 2420. If we get below 2420, especially on a closing basis, you're going to be looking at 618 or possibly 786. And believe me, when you get a market that's up 1,000 points in the Dow, which is certainly an outlier event, people are, wondering what's going on around here. And you had the S&P up 110 and the NASDAQ up 330 points. I mean, those are monster moves, folks. And this is telling you that, what's here to stay, and that is volatility. We've been talking about that for a year, and we believe that volatility is still going to get higher and higher and higher. We're going to see swings like we haven't seen in a very long time, and that's ideal for pattern recognition swing trading, which is really a whole lot of fun. Now, I've got to show you this chart, folks, because we talk about natural gas in here. It's the last 3 or 4 months the last 4 months that I've been following natural gas. Since early November, with our good friend Mr. Z pointing out some of these things. But remember, this is a 15-minute chart, and you see the big ABCD that we had up there at 390. Remember, the high on this was a month earlier at 4.7. That's an $8,000 move. What you're looking at here on these red swings that you're seeing here, these are monster swings, folks. $4,000 up, $4,000 down, $4,000 up, $6,000 down, $4,000 up. That's in 6 days. I mean, that makes the S&P look like you're trading oats. I mean, this is the pork bellies of trading. If you understand trading, look at that natural gas, because that puppy swings like a playground swing with 5 kids trying to get on one seat. I mean, it's just a really wild, and the fills are good, the patterns are good, all the things that are necessary for fun trading are right there. So pay close attention to that. Someone's asking a question. They live out in Iowa where there's no coin dealers. Just go online and find some. And if you have a problem with it, just drop me a note. Larry Pesavento, gmail.com. I'll check out the dealer for you. I make one phone call. I can tell you whether the guy's reputable or not. But if he's an ANA or a PCGS, 99% of the time he's going to be okay. There's some crooks out there, but another good. Oh, David White is another great company. You're right, David. Kitco. KITCO.com, great company to do business with, good deliveries, fair prices, great, really good. David, do me a favor, David, post that in the room, not just private, would you please? Because they're a great outfit. I forgot how good they really are. So, you'll see a lot of these news, what do you call these, infomercials and stuff. on the TV where they're selling gold and silver. Most of those people are very reputable too, but make sure that they are registered with the ANA or the PCGS, because they do follow those very, very closely as far as requirements and things like that. But Kitco is a very, very good company. At least it was. I haven't done business with them for many, many years. I deal with one fellow out of Beverly Hills that I've done, and I don't do a lot anymore because I got enough of what I think is enough, but you never know. Anyway, that's how it goes. But Silver Queen is the one in Largo, so you should be okay at that. Oh, we got a break coming up here, and then we got the rest of the show, and then we'll be moving on, and we'll see what's going on here today. Okay, we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, off the books here, I'll tell you a funny story about the coins, the gold coins. When I worked at Drexel, people could legally own gold for the first time. This was like 1977, and there was a gentleman sitting in my office, and I had been over at somebody else's office visiting, and I came back, and there was this guy sitting there with a leather coat on, and I had 10 cougar ends sitting on my desk because I had them for delivery for someone, and he was picking it up and looking at them. I walked into the office, and I said, "Hey, I've counted those, and he started laughing. And I didn't know who he was. And then my secretary came in, and it was his godfather. It was none other than Gene Roddenberry of Star Trek. And the largest gold transaction that I did for cash during those years at Drexel was about a year later. He bought 50. I know he bought 500. He bought 500 Krugerrands for 200 and I forget what it was, 270 or something like that. It was 140,000 large. I remember that because they cleared the check before we delivered the coins to him, and we had Connie and I took the coins over to him to his office. But a really nice fellow. Okay, let's move on here to the chart that I posted here is the chart for crude oil. Not only did it have a big move yesterday in the neighborhood of a little over 5%, you notice it stopped at the 382 of the high of the December high. So if we can get crude oil above 47.50 or something like that, it's got a chance for a pretty good rally. But whether these continuing rally or not, this could just have been a one-day wonder, folks. We live in interesting times, as the old Chinese curse says. So pay very, very close attention to this. Now, we have an interesting situation here in the U.S. dollar. We'll bring this up because, we've been moving. We're down at 96.20 today. We're not rallying off of this ABCD, which is a sign that we could be getting ready to break a little lower. And we had that potential 3-drive pattern up there at 97.50. So that's it. And if we look at the euro, the euro's the one that should be telling us what we're doing, because usually it's very, very weak. I posted this last night. And as you can see here in the euro, we'll be able to see what's looking on. Mr. Z is asking, what's my next Japanese yen trade? Frankly, Mr. Z, I think that there's a possibility here that we could be in for something pretty significant to the higher lower in the dollar yen. So I'm just waiting to see what the next swing is going to be. I'm not really interested in that right now. My main focus, of course, has been in I've been short the Treasury bonds, which I've liked, and we covered our short stock positions a little early on the 20th before the last 170 points down, and we're standing aside. In that a few people were able to get long yesterday on looking at that 1.618 number. That banking index was the real key, in my opinion, and that's going to be the key to that Japanese yen also, because if we take a look at the Japanese yen chart, you'll notice that we went right down. We went below that support that I was looking for. We went down to the little bit below it. I would have liked to have seen it hold at that 10 level, but we actually went we had a trade at 109.96, which is quite a bit lower than I was expecting. So I have to assume that this might be a sale on the rally back. That's what I'm looking at here. I don't know for sure. Now, we've made that 3-drive to a top pattern during June and October. That was a beautiful one. Then we had the 1-3-5 pattern all during November and December with the lower highs, the lower bottoms. That meant your trend was down, and the trend is still down. So I have to assume that that's going to happen, and I have to wait to see what this next rally is going to be. And what I'll be waiting for is to see an ABCD format in here somewhere around, probably be about 112.56, 113 would be my guess. But any move above 114.70, this thing is off to the races. That's the main thing to keep a close eye on, because that's the most interesting one of all. Remember yesterday when we were discussing this early in the morning about the news from Dennis Gartman on the fear index? We had that big move down. Usually when you have a breakdown like this and a move up, it's going to last more than just 1 or 2 days, because they frankly did scare the bejeebies out of the shorts yesterday. And that was, you had a big ABCD, and the VIX index stopped exactly. But the VIX index never backed off very much, given the fact that the Dow was up 1,000 points. I mean, that's really a big will be a big things. We'll see if that's going to be the best thing. Well, we'll have to wait and see how these things turn out. But longer term, we're all going to be okay. Doesn't make any difference. But it's going to be a little rocky along the way. Let's take one more look here. This was Deutsche Bank while it was rallying. Just a second here. Get it up to date here just to show you where we are. Boy, oh boy, I hit the wrong buttons, and these things just don't act very well. Here we go. Here's the Deutsche Bank where it was $2 higher. We're now trading below the bottom of the page, folks. We're below 17.8. So this market is it's in big trouble. And you're talking about the largest bank in Europe, not counting HSBC. I mean that's a big deal. So we got to pay very, very close attention to that because we could be looking at some really serious moves in that banking business. But it hasn't got much more to go. It has a price objective of around $4. I don't believe that they're going to let that bank go under. But if they do, they do. That's the way it is. Nothing else you can do about that. So we'll take a look at it and see what's going on here. The gold is anything above this 1280 level. We were looking at 1300. It looks like without any trouble. Silver's been lagging, but it's actually picking up now. We've taken out those highs of yesterday, but we haven't done it yet in the gold. So we'll be able to see if that's going to be the case. Now, I wanted to share with you some work that's done by my buddy Jim Bartolioni. He works a lot with circles and ellipses, and if you'll take a look at that, you'll see here, this is the long-term IBM weekly chart, and it's really amazing how these tag along to some of these circular areas. I mean, it's really amazing to see the geometry that you see here in IBM, and in other charts are doing the same thing. But that's the type of work that he does. He adds the geometry of the circle and the ellipse to these things, and it really adds a great deal. This is a little above the pay grade that I look for, but it's quite interesting of how the chart looks on a technical basis. And some of the ones that he has is really really quite amazing because he does a lot of work. That's for sure. He's the retired F-16 pilot, and he full-time trader now, and he does a great deal of work with these things also. Remember, one of the things that we mentioned about this whole problem is related to credit, and this is why these high-grade bonds have been getting hit so really bad. I believe Treasury bonds are going to get hit. I know they think it's a flight to quality, but that's like giving an arsonist gasoline to put out a fire. And that's the way I look at it. Here's where we were back in 2008. If you want to go back and look at where we were with the bond market, and you'll see here that we've gone from 2 trillion or 3 trillion up to we've doubled 7.5 trillion, and they did that with quantitative easing. The Fed's made it too easy. Not a good deal. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
We've been on the air. I posted the chart of that natural gas. It made a 61% retracement. It's already dropped $1,500. You know, that's equivalent to 30 handles. Yeah, 30. No, that's equivalent of how many? Wow. That's what, 30 points in the S&P? Let me see. Oh my goodness, I can't even. Yeah, 30 points in the S&P. That's a heck of a move. Anyway, just keep an eye on that. If you're an active trader, watch that natural gas. It's a great contract to trade and gives pretty good execution and everything too. The volume's pretty good, so it makes it very, very interesting. Now, I did want to bring to your attention one other situation that we have going on that we've been waiting for quite some time, and that's in the loonie, also known as the Canadian dollar. And if you put it up here, you'll notice that the price objective that we've been waiting for was at 136.60. We hit that about 15 minutes ago. So far, that has been the top. If you're going to do that, it's right in that zone right now, so it doesn't take much to see whether you're right or wrong, because you have two major ABCD patterns in there that hit spot on at that 136.60 and anything above 136.85. So you got to risk about $150 on that to see if you're going to be right or not. That's the main thing. One other question that someone asked about during the break, and that was the move in 2009. I want to bring this up to show you something about this that those of you that have been with me, and that's when I started, I think I started in 2007 with, well, it's hard to believe I've been going on that long with TFNN, but it's been fun. Anyway, we had that 3 drive to a bottom pattern, but folks, down there on March the 5th of 2009, we had one of the most amazing astrological events that I've seen, and I don't understand a whole lot of it, but all these planets were lined up in 2 houses. I mean, everything. It was so lopsided. It was just amazing. I said, this has got to be, you know, something huge. And bada bing, bada boom, that's what happened. So we didn't have anything like that yesterday. The only thing we had, of course, was the thing that was brought to us by Tim Bost when he mentioned to us about this Mercury retrograde motion that was coming in along with that Venus and all the other things that were occurring. And, of course, the low was made on the night of the 25th. So whether that's going to be a pretty good move or not remains to be seen. But it does have the earmarks of something really, really big happening. So pay close attention to that, because if we go below those lows that we made on Monday, that's not going to be a very, very good scenario to think the market's going to go a lot higher. To confuse everybody, the best thing for the bears would be to have a really strong rally here that would take us into early February, and you know, how high it's going to get, you know, no one knows. And so what we want to do is to follow it as we go through. Now, the key to watch today is if you're really bullish, you really want to see this S&P stay above 2419. That's the 382 retracement of the low. Remember, we rallied 160 pips off the bottom, folks. Actually 170. We rallied 170 pips off the bottom. That's handles, excuse me, 170 handles. And that's one of the biggest moves we've had. I think it was the biggest move ever in the S&P. I know the NASDAQ was 330, but that had been so very oversold. You know, they just caught the shorts, you know, totally by surprise. The other one to watch, of course, is the crude oil. We mentioned that, the fact that we went up 5% in one day. What we've done now is we've come down and we're testing the 38% retracement at 45.40. If crude oil is going to be any good at all, it's not going to get below 44. That's another $1.50 from where it is right now. So keep a close eye on that, because it's going to be interesting to see if these things hold up. This big volatility is great if it follows through, but if it doesn't, that's when the problems arise, and then you've got to be, you know, really careful. So just remember that history repeats itself, and those people that don't read history are bound to repeat it, and we try not to let that happen here at TFNN. Regarding the bonds, I believe the bonds are still going to go much lower. We're having a 61% retracement back in the notes right now, up here at 121.12. That doesn't mean they can't go up and make new highs, because if this stock market weakens, people will run to the Treasury bonds for safety, and I believe that's the wrong thing to do, but it is their money, so they get to do what they want with it. So keep that in mind. On the currency front, we're setting at that real key level in the euro at that 114.10. If we break above 114.10, folks, that could mean the euro is going to strengthen. That would probably bring strength into gold and silver. And of course, the reverse of that would be pushing the dollar down, breaking below that 96 level, which it certainly could do. So these are all key levels to pay attention to. And with the new year coming in, for some reason, these currencies have a really strong affinity for the first of the year. I don't know if it's planning or whatever it is, but there's usually a lot of cycles related to currency moves right around the first of the year. And that's one of the things that I will be doing this weekend, is focusing on some of these longer term things to see what could be coming into the pot for next year. So stay tuned for that one. That'll be a real interesting one to look at. Now, we had a request from one of our folks over across the pond over there in Hong Kong this morning to take a look at that. And you'll notice here that you'll see a beautiful retracement here. We had a beautiful island reversal down there in October. We had a pretty good rally. Then we had the pullback. And it's very important now that this Hang Seng does not get any lower than 2450. Now, yesterday, it was 500 points higher on the opening, because, you know, when they open in the evening, they see that we're up 1,000 points. So they came in buying like crazy, and they closed lower. That's not a good sign. So they have to hold that 23,500 level, or it's going to be Katie bar the door on the downside. So you got to be very careful, folks. You know, bulls can make money and bears can make money, but pigs always lose. So just remember, that's it. Yes, we're coming down to that test, and that is very important in this E-mini S&P at this 2420. That's the 382 level, and if we break below that, then there's a possibility. Realize, folks, that, you know, we were down 400 points in the Dow at one time. I don't know where we are now, but that's a pretty big move. And you know, the fact that the gold and silver are moving strong and the notes are moving strong, maybe this was just a bear market rally. You know, so we'll see. Believe me, we could give it all back. Listen, if you can go 170 points up in a day, you can go 170 points down in a day. That's called market news. What goes up must come down. So it's important that we hold some of these key levels, because if we don't, you're looking at some serious things. And longer term, we believe that we are in a bear market that's going to last a couple more years, but there's going to be a lot of profitability in commodities, and also in some stocks too. There are going to be stocks that go counter trend to this. So we want to keep watching these each day as we look at some of these things. One more question here, and then we got to take another break. Oh, the break is up. We'll get back, and I'll answer that question regarding the the banking index in just a moment, and also the silver trade that someone posted. I'll give you an idea on that in just a second.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of that banking index. That's the one to keep an eye on. Below 80 in that banking index is Katie bar the door. Keep some cash on hand. If we take a look here at this chart that we posted a couple of weeks ago, this is a long-term chart from, I don't know who this is, Kimball Charting Solutions, but it's a beautiful chart. Going back over the last 50 years in silver, you can see these descending triangles that we've had here, and we're getting ready to break out of one. If we get above 1550 in spot silver, that is certainly probably going to do that. So we'll be able to take a look at it. Let's get this silver chart up here again so you can see it. And then you'll be able to see that we've got a possibility here of a really major move here in the silver. Always have some silver rounds on, you know, the silver spot coins with the St. Gaudens picture on them, 99%. I recommend everybody to have some of those, because if we ever run into an electrical problem when they're not taking credit cards and cash, people understand silver and silver is easier to distribute than gold because gold is 10 times more expensive, and so you got to be able to buy bread. I don't know. I've always had some, so hell, I don't know if it means any. Oh my goodness, I said the H word. I don't know if it means anything or not, but it seems that it's going to be interesting whether that happens or not. So we're in an interesting time here. We did hit the 2419 in the S&P. That was the 38% retracement. And whether it's going to stay there or not, I don't know. But below that, you're looking at 2379. So, that's another 40 handles down. So be really careful with these markets because it's very, very interesting. We got the euro now popping up above the 114.10 now. If we get much above 114.30, this dollar is going to start weakening, and that's going to put a lot of things going on in the market. If you're in that Canadian dollar trade, it started to work. I wouldn't risk more than $150 in that because of the setup that the markets are in right now. And, that's another way. Every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.